macro analysis of Bitcoin, specifically the 4-year cycles and then the internals of those 4-year cycles. So each cycle having mini cycles that play out inside of it, and kind of going over the immediate short-term direction, what we should expect, and where we are at right now in our current cycle in comparison to where we are at in the same time range in previous cycles. So starting off, we have the 1400-day time extension. All of these are just time extensions. So the time between 2 points marked out, and then it's kind of broken down. So we have 4 of them. The first one being 1400 days, 1000 days, 900 days, 700 days, and then 400 days. So 5 of them actually. But basically, all of these played out very, very closely every single cycle that we had. So starting off with the first cycle here, we have from the beginning, the first pull being 462 days. We have kind of a small pullback before Bitcoin has a big push up. And then the 700-day point, and keep in mind for all of these, make it like give or take 100 days. So within 700 to 800 days for the 700-day cycle, I'm going to call it. This one being like anywhere between 400 days and like 480. Just keep that in mind. So all of them, I know they're like very specific days, but it's more like the 100-day range of the 900-day cycle. So let's just keep that in mind as we're going through all of these. So basically, the 400-day cycle, like we just talked about, it's a pullback before we have a bigger push up. The 700-day cycle, we have after that push up a pullback that happened, and then kind of the resumption after the pullback is done, continuing, the next portion of the accumulation. But this one I marked out orange because it's a very critical cycle that plays out within each 4-year cycle. So all of those are going to be marked out orange. And the reason being is this is the final kind of consolidation we have before the big expansion starts, before the juicy part of the bull run, I guess we could call it. When you're waking up every morning and seeing BTCs up like another 25% in a day. So that's going to be the 1000-day cycle. So the 1000-day, anywhere between 1000 and 1100 days, is going to be the juicy portion of the cycle. And we can see, moving on to the 900 one, each one of the 900-day cycles has a pump, a quick dump, a consolidation, and then continuation. And then that continuation point is the 1000-day cycle, where we just immediately start heading up. That's going to be the 1000-day cycle. So getting in on the lows of the 900-day cycle, on that dump portion of it, is kind of like the safest area you can get into before the bull run's about to start. So let's keep moving on here. So you get the point of each kind of cycle and the characteristics of each one. So starting again, the next cycle we had, the 400-day point, we're coming from a peak, and then we start consolidating before we start heading up, right? 700-day cycle, same thing. We're coming down from that downtrend, and then we finally break out, have that small little pullback, and we're continuating back up. So it's still in the accumulation area, I guess you call it. If you're looking at the rainbow chart, the 700-day point of the cycle would be, I guess, where it's marked out like, oh, still good price, still low price, still accumulating. Moving on to the 900-day cycle. And by the way, all of these from peak to peak after the first cycle, those 1400-day cycles, just to show you the next peak. So from this peak right here, after 1400 days, to the next one is going to be the top of the next cycle, and then we have our bear market. And then from this peak to this one was the top, another 1400 days, the top before the 2022 bear market came in. And then from this peak to this one, we're expecting our cycle peak this time around to be in sometime early November to early December of 2025. So that's what the cycle peak should be according to this, but we'll get into that later. So basically, next up, after the 700-day point, we have the 900-day cycle again, which is, again, just like this one. All of the 900-day ones are going to be marked out with red circles. This one, same thing, pump, quick dump, consolidation, continuation. The continuation point being 1100 days on this one, or I guess you could just still call it 1,000 days, because right here is 1100 days. Technically that move started right here, so I would even pull this back to here, so 1,050 days. And that's the start of the juicy part of the bull run. And then this being the peak, we're starting again. We pull 400 days. What is the 400-day point? We're coming down from the peak. See how repetitive this is getting? We're coming down from the peak. We bottom out at 400 days. We're about to start heading up again. 441 days on this one. And then this one being 798 days. This one was a little bit longer. Again, 700 to 800 days. This one was the dollar liquidity crisis, this drop that we had to, what was it, like 36, 3,800, something like that. So that one was a little bit different because we had the dollar liquidity crisis, and that was a fundamental event that kind of changed things a little bit. But still, within the 700 to 800 day range, we had that quick pullback before the accumulation was about to finish and we start heading up. The red circle, 938 days. Again, the pump, quick dump, consolidation, continuation. The continuation point being the 1,000-day cycle, which was right here. So the 1,000-day being right here, right before the main expansion of the bull market happens. So we can see this repeating out so far every single cycle. Like the characteristics of each time point of all these cycles is repeating itself with its pattern. So right here with the current cycle coming from the peak in November of 2021, we have first the 400-day point, which is, I have to kind of separate these because it's getting a little bit cluttered, but 400 to 20-day point, we came from the peak, bottomed out, we're about to start resuming, just like the rest of them. 700-day point, we kind of pulled back a little bit before we start heading up again. So still in that accumulation range. The accumulation's about to finish. So that was the 700-day point. And now this is where it gets interesting. So like I talked about, the 900-day cycle within each 4-year cycle being the very critical point, because we just entered it. Like 910 days, we just entered it. And we know based off the previous cycles, in every single one of them, without exception, we had a quick pump, a sharp dump, a consolidation, and then a continuation on the 1,000-day point. So if we're at 910 days right now, we can expect, 80 to 120 days of this going on, the pump, dump, consolidation, resumption, before our major continuation starts. So people are kind of frantic all over YouTube and Twitter going like, oh, is bull market already started? We're about to pump to 100K. Yes, I think we are, but not yet. We still have 3 months-ish of time of, consolidation that we have to go through, which is going to basically be a bull trap to get people in too early, thinking the bull run's about to start, and then just dump, liquidating all those day traders, all those people using leverage trading and are overly leveraged, and just liquidating them, being a huge liquidity sweep so that smart money can enter in their trades. And then the 1,000-day cycle should start, and then the major resumption starts again. So why do I have these 2 red boxes here? So there are major bar patterns that play out, like macro bar patterns, and then there's micro bar patterns that play out as well. And I like to look at, pretty recent price action and find a bar pattern that is repeating itself and apply it to the macro bar pattern. And if it's in harmony with it, if it's agreeing with it, and price is also confirming it, then, I would just follow that bar pattern. So right here, I noticed we're following this price action very closely. So I'm going to drop it down to the daily time frame. So let's look at here. So basically, I'm attributing this price action right here to this right here. And just looking at it, you can see it's, you know, it's pretty similar. They're not going to be perfect, but we can see that it's following the 900-day cycle, being that we have a quick pump, a sharp dump, a consolidation, and then a continuation. And taking the bar pattern, I didn't stretch it or anything like that, planting it right here, and then seeing how long that is, that matches the overall cycle theory, because in 120 days from now, we're going to be in the 1,000-day range of the cycle, which is, you guessed it, the major juicy part of the bull run that gets most amount, you know, the major profits. So this bar pattern is saying that we're going to have a pump, dump, consolidation, continuation, just as we should in accordance with the 900-day cycle. And then the rest of the bar pattern showing that we should just have a big, you know, continuation upwards, which is what the 1,000-day cycle says we should start doing in about 100 to, you know, 120 to 150 days from now, kind of in that range. So I saw this when price was over here, when it hasn't even pumped yet, and I kind of front ran the trade where I entered before price confirmed the movement a little bit, and then I added and I DCA'd in as price started proving me right a little bit at like 65K. So I'm still currently in profit, but I think we're going to head up a little bit more. So with this bar pattern, we can see that we kind of head up, we break below that little steep uptrend that it makes, just like we did over here, and then we make this little double top here and then break that uptrend and head down, just like we did over here. We make that double top, break that uptrend, start heading down. After we break that uptrend, let me use I'll just use this. We make this kind of internal range right here, and then break above it, and then make a lower low, just like we did here. After we broke there, we made that little internal range downtrend, a little bit lower time frame. Break above it, and then a lower low, literally just like it did over here. We break above it, and then make a lower low, and then we spike up. So as soon as we broke above it, broke down, made that lower low, spike above it, pull back, and then boom, we had our spike. So this spike was not surprising to me at all. I was already long, and that's not to like brag or anything. It's to show the validity of the bar pattern. Like it's really playing out. So far, if I had to guess where we were, or not even guess, kind of just apply what price is doing now to the bar pattern, I would say that we are about right here, where we have this kind of stronger pullback, and this pullback has this wick that is retesting these previous resistances, which is pretty much what it's doing right here. We have these previous resistances right here, and then we pulled back and kind of retested them. Of course, price isn't going to play out perfectly in accordance with the bar pattern. It's just going to be similar, and so far, that's similar. It's a little bit, you know, lower than I thought it would drop, and if it does continue to drop lower, I would, you know, say it's deviating from the bar pattern. I'm not going to be delusional about it and, you know, just bag hold my longs or anything. I'm you know, very objective about this, and my stop loss would be kind of near these lows, which is pretty much back at my break-even entry. So I'm not really risking anything. But yeah, so this is what I'm expecting to happen in the next 100 days ish. I think we're going to head up a little bit higher, consolidate at these highs around 68 to 70K, just like it did over here. And then after we consolidate for some time up here, I think we're going to dump to kind of cause like this liquidity sweep so smart money can get in their longs right before the 1,000-day cycle starts and we start heading up for real. Oh, another thing, see this uptrend here that's like following perfectly, and then we pump on that third touch of that uptrend, and then that dump breaks below it. That's another thing we're repeating. So here's the 3-touch trend line, just like we had from here. We consolidate, pump, touch it for the third time, and then we break below it, just like from here. We're consolidating, which starts the uptrend. Touch it here, we touched it here, just like we did over here. We pumped right after, and pumped right after. I mean, obvious trend lines are sketchy. When you see a trend line playing out this perfectly, I mean, you know how many retail people are looking at this trend line? Now, I'm a retail trader too, I'm not saying it like that, but you understand what I mean, like the basic trend line, support and resistance traders. You know, we all see this trend line, and the fact that it holds and gets people to get in the trade, and then a distribution is, you know, going to occur right here, or should occur according to the bar pattern, so that it can, you know, get closer to the trend line. If we just had to pump up here and drop straight away without consolidating, the price would need to dump lower for it to be a broken trend line, which would scare the retail into selling so that they can sell to the smart money, right? But if you consolidate the price up here, you don't even need to dump the price that low, because the price is already, you know, the trend line is catching up to the price. So the breakout point would be at like 70K or 72K or whatever, to cause the fear to drop, rather than trying to dump when people are still bullish this much and then causing the fear right here. So that's why I really think this consolidation is going to come in. We're going to break below it. Does it have to go up this high before it consolidates? No, it can just, you know, be these highs just like it was over here. We made a higher high, but not by much. It kind of just wicked a little bit higher than this high right here. So I think we could do something similar to that. You know, maybe break above these highs right here into this zone, and then wick through it a couple times, and then start, you know, breaking down, and then make that quick drop that comes in. So that's the game plan. Obviously, none of this is financial advice. This is just what I'm waiting on. So far, price has been proving me right. I'm expecting the consolidation. Going to short the breakdown. Try to, you know, scalp the highs and lows of the range right here. Just obviously got to wait for price to develop a little bit, showing where the highs and lows are going to be, and then I'm going to be, you know, trading the highs and lows of this range, trying to get in at support, sell at resistance, just to accumulate more capital before the 1,000-year. Sorry, why do I keep saying that? The 1,000-day point starts, where the juicy part of the bull run comes in. So I'm going to be accumulating on these lows, DCAing in, being fully positioned in. I'm going to be trading with leverage as well, but not like crazy leverage. And then, yeah, just holding through the rest of the bull run. So that's the macro analysis for BTC. If you guys agree or disagree, just put it in the comments. I'll read them. And then I have another video that I want to post about EGLD, which will be after this one, which is an altcoin that I really, really see a lot of potential with that one. And, you know, the altcoins follow Bitcoin. So with this big expansion coming up, I'm just going to make a video on how I'm approaching that kind of trade setup. So, yeah, that's it for this video.